Welcome back to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here. Today will be the Thursday, the 16th of October, 2025. So as usual, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so as usual, let's have a quick recap what has taken shape yesterday and as well as in today's early Asia session in terms of the relevant news flow, economic data release, and as well as their respective impact on the intraday movement of those broad-based cross asset classes that we cover on the frequent basis. And as well as today, I will share with you two chart of the day before we wrap up this session with key events data to look out for today's trading session. So yesterday, I would say that in terms of news flow release is a rather quiet session during the US, not much data on top of the earnings result from the two major US banks. So let's start with the earning result of the two US major banks first. So over here, we continue to see a rosy earnings result coming out from the major financial institutions. So yesterday we have the earnings report from Bank of America as well as Morgan Stanley. So both of them managed to beat earnings expectation. Okay, let me expand my screen over here. So for Bank of America, their third quarter earnings beat estimate driven by investment banking activities and a comeback in M&A deals, and as well as their net interest income. All these three key business metrics managed to beat sell-side analyst expectation for Bank of America, and as well as Morgan Stanley, which is considered as much more of a smaller investment bank as compared to Goldman Sachs. So what's interesting over here is that Morgan Stanley's stock trading division managed to actually surpass expectation in the third quarter, and with revenue from trading stocks surging to 35% to 4.12 billion dollars. And also the firm got a boost from better than expected investment banking fees, which rose 44% year on year, and its wealth business exceeded revenue estimate as well. So for what you could see over here is that these earnings results coming out from the major financial institutions, Citigroup, which reported earnings earlier on Tuesday, JP Morgan, Goldman Sachs, and as well Wells Fargo, all of them actually surpassed sell-side analyst expectation. So we know that banks itself and US financial institutes are considered as, we could look at as their profit growth on their revenue growth as a barometer of the US, the health of the US financial sector. So if these leading US banks slash US financial institutions continues to beat estimates and continue to show robust, healthy revenue stream from investment banking, from deal making, from net interest income margin. Net overall, it tells us that the US financial health is still in a robust state. It's not in a state of deterioration, and that could potentially has a positive spillover impact into the general sentiment on the US stock market. So what you could see over here is that the US stock market continues to be rather robust yesterday in terms of sentiment. So all the four major stock US indices closed in the green, with the exception of Dow Jones. Dow Jones not that bad. Even though it didn't close in the green, it managed to hover at its key pivotal support, which I will highlight in a short while time. So let me touch you the four performance, we call it intraday performance of the major stock indices. SPX closed up 0.4%. The Nasdaq 100 slightly higher, positive 0.68%. The Dow Jones almost unchanged, negative 0.04%. And the Russell 2000 continues to shine by closing up 0.97%, which is almost 1%, due to a much more highly anticipated dovish Fed heading into 2026, which I shared with you guys yesterday, right, on the rising bets of higher probability of 3 interest rate cuts heading into 2026 after Fed Chair dovish speech on Tuesday, okay, which I already covered in yesterday's daily dose over here. So let me share with you guys with the very quick on the chart of the Dow Jones Industrial Average. So despite the fact that the Dow Jones Industrial Average closed almost unchanged, the short-term outlook still remains positive. Why do I say that? Because if you look at the US Wall Street 30 index over here, it still continues to trade above the 50-day moving average, which is my pivotal support that I highlighted yesterday at 45,710. And yesterday's initial sell-off at 1 a.m. Singapore time, Thursday, managed to form a bullish hammer candlestick right exactly at our intermediate support, which we highlighted yesterday as well at 46,250. So still no change. These are the two key support level to watch for today's trading session. Intermediate support at 46,250. Pivotal support remains the same at 45,710 with the intermediate resistance at 46,920, 47,160 as we maintain our short-term intraday bullish bias. So unless we have a clear bullish breakout above 46,920, that means a bullish breakout and hourly close above 46,920, then I could tighten my pivotal support towards 45,710. Right, so that's for the US Wall Street 30. A very quick update on that. So moving forward over here is that we also have another earnings related news flow that is much earnings news flow pertaining to the AI bullish optimism team play that has been holding on, that has been put it away, that has been significantly contributing to the ongoing major and medium-term bullish trend of the US stock market, especially in the Nasdaq 100, followed by the S&P 500, given the fact that these two US benchmark stock indices are heavily concentrated on the mega cap technology stocks that has been basking in the bullish limelight due to the AI optimism team play. And part of this AI optimism team play is ASML over here. So we know that ASML, very briefly, is a very unique player in the global semiconductor supply chain, because we know that in order to come up with the advanced semiconductor chips, we required some other inputs to actually make the finalized semiconductor chips, the most advanced one, to run those AI data center, which OpenAI has kind of a purchase or have a mega deal with these players like AMD, NVIDIA, and whatsoever. So ASML, in order to run this, in order for these advanced semiconductor chips to be made, ASML provide the kind of a solution, input. Put it with the ASML product is part of the input to make these finalized advanced semiconductor chips, and hence whatever earnings coming out from ASML will have a significant feedback loop impact on the entire semiconductor supply chain, and has the feedback loop on the semiconductor stocks as well. So ASML yesterday reported its Q3, so it's a Dutch firm over here. So it posted 5.4 billion euro in bookings for the third quarter, and its shares rose as much as 4.8% over here. But however, businesses in China will be significantly lower due to the ongoing so-called put it away that US advisory of getting its airlines not to supply cutting edge products that could actually allow China to build higher end semiconductor chips, which is ASML fall into this sphere as well. So revenue for China will be much lesser, but from the rest of the world, sales that will still remains robust, as ASML sales will favor its cutting edge machine. So hence creating a positive feedback loop into the Nasdaq 100 yesterday. All right. So now, on top of that, before we go into this, is that some trade-related trade that's US/China trade-related tension news flow is coming out from a key US official that is contributing to the ongoing trade deal truce negotiation between US and China. Nevertheless, will be the US Treasury Secretary Bassett over here. So Bassett yesterday on the sideline of this ongoing IMF World Bank convention or summit in US stated that he actually floats the idea of a longer term China truce after the so-called recent fiasco between the rare earth export so-called control, stricter export control being introduced by China late last week over here. So US Treasury Secretary Scott Bessent said the possibility of extending a pause of import duties on China goods for longer than 3 months exists if China halts its plan for strict new export control on rare earth elements. So Secretary U.S. Secretary Scott Bessent seems to be offering a dovish relief, a tone down of a much more hawkish rhetoric as being blotted out by U.S. President Trump on Friday. So he actually floated the possibility that we know that right now Trump give a deadline of 1st of November, saying that potentially there could be an additional 100% tariffs on China products heading to the U.S. if China does not want to back down on its export control of rare earth products heading into the United States to allow US semiconductor to obtain this product to build that advanced semiconductor chip. All right, and given the fact that on the I think 12th of November or so, second week of November, that latest extended trade truce deal between US and China were expired. Okay, so what Bassett mentioned that these trade truce deals could further extend down further 3 more months down the road. So he actually proposed that situation is a bit not so complex at this point in time, and there could be a further extension of these trade truce for these two countries to iron out itself. So that also created a positive feedback loop back into the US stock market as well, and also created a positive feedback loop in today's Asia session. So Asia session in terms of the performance of the major Asia Pacific stock indices. So the Nikkei 225 is up by 0.9%. The Hang Seng Index down slightly, negative 0.3%. The CSI 300, which is the benchmark A shares, is up by 0.7% as we are speaking right now. And the rest of other Southeast Asia and North Asia benchmark stock indices remains rosy. The Kospi 200 is up 2.2%. The STI is the outlier, which is down by negative 0.4%, whereas other Southeast Asia benchmark stock indices continues to remain trade in the green, I would say. So we have the Malaysia KRCL index up 0.2%. We have the ASX 200, which is Australia benchmark index, up by almost 1% as we are speaking right now, 0.97%. So overall, other than the underperformance of the Singapore STI, which is down by negative 0.4%, the rest of the Asia Pacific and Southeast Asia benchmark stock indices remains trading in the green as we are speaking right now, having that positive feedback loop from that less hawkish rhetoric remark from US Treasury Scott Bessent yesterday. All right, so with that now, let me share with you guys the chart of the day for today. So two chart of the day. So one chart of the day will be the continued of this dollar weakness over here. So we see that this is the 5-day rolling performance of the dollar. So the dollar remains weak, reinforced by that dovish Fed chair speech on Tuesday. So one particular chart of the day I'll share with you guys will be the euro dollar over here. So the euro dollar, yesterday I do mention that we are in this midst of a potential double bottom formation over here. So let me expand my screen so that you guys can have a better view of the charts. All right, so this is a minor double bottom formation on the hourly chart. So this bottoming formation yesterday, it triggered a bullish breakout after breaking out above our intermediate resistance at 1.625, 1.650 over here. Right, so this has really did a bullish breakout. So right now the hourly RSI has really hit a overbought level over here. So upon hitting the overbought zone over here, there is no bearish divergence. There's no bearish divergence. All right, no bearish divergence, indicating that at most what we could see right now on the euro dollar after that bullish breakout from this minor double bottom formation is a likely pullback to yesterday's neckline resistance, now turns into a pullback support at the 116.25. So I'll be using any minor pullbacks to remain a bullish buyer stance on the euro dollar, having a tightened short-term pivotal support now to 115.90 over here, 115.90. So as long as any minor pullback didn't surpass below 115.90, tighten short-term pivotal support on the euro dollar, we will still maintain our bullish buyer stance on the euro dollar, heading up towards the next intermediate resistance zone for today at 116.90, followed by a 117.60 next. All right, that's for the euro dollar. Only a bearish breakdown below 115.90 will invalidate the bullish breakout scenario, and as well as invalidate the bullish buyer scenario for the euro dollar to shape another choppy down move to retest the 115.30 medium term pivotal support level. All right, so in light with the continued weakness of the dollar as we are speaking right now, potentially that could also create a feedback loop back, positive feedback loop into that red hot gold, okay, that is still continues to trade in a bullish uptrend phase. All right, over here. So for gold yesterday, I do highlight that two resistance level has already been surpassed in our bullish buyer stance, 4,184 slash 4,189, and now testing the next resistance at 4,240, 4,252. All right, over here. So given the fact that it has broken above this resistance level over here, very clearly is now in the phase of a bullish acceleration phase, which I mentioned yesterday. So yesterday, what it did is that it managed to did a pullback right exactly at the former medium-term ascending channel upper boundary, now turns into a pullback support, hit and stage this bullish acceleration as it continues to head up towards the top of this minor bullish acceleration channel that has been taking shape since the low of 10th of October, which is last Friday. So with that, the hourly RSI continues to remain in a bullish momentum dynamic as it continues to trade in a series of higher low, no clear signs of a bullish bearish divergence as well. So no clear signs of a bearish divergence. So with that, gold XAU/USD that will be featured at our chart of the day for today as well. Continues to trade in a bullish acceleration. That means, i.e., we will maintain our bullish bias with a tightened short-term pivotal support for today in any minor pullback. So as long as it's any minor pullback, first pullback support level to watch will be 4,184. Maximum will be my tightened short-term pivotal support at 4,143. So maintain my bullish bias in any potential minor pullback as long as this tightened short-term pivotal support is not surpassed to the downside at 4,143. Next resistance level to watch after 4,252 will be the top of this minor bullish acceleration channel that confluence with a Fibo extension cluster level as well at 4,311, 4,330. Only a bearish breakdown below 4,143 will invalidate today's bullish bias stance to kickstart a minor corrective decline sequence to expose the next two support levels on the intermediate term basis, 4,107 followed by 4,056 over here. All right, so that sum up my chart of the day. So today will be special. There are two chart of the day I will share with you guys due to the interesting technical configuration on the euro dollar and as well as gold XAU/USD. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So for today's session will be on Thursday. Let me very quickly go down to the European session over here. Okay, so on Thursday during the start of the European, before the start of the European session at 3 p.m. Singapore time, at 2 p.m. we will have the monthly GDP growth figures for the month of August for UK. That could potentially influence the movement of the sterling dollar and the sterling crosses. So on a year-on-year basis, on an annualized basis for the month of August, market participants expect a slow down tick to 1.3% annualized for the month of August, slightly below the July print of 1.4% annualized. Then thereafter, as we head into the start of the US session, we have a couple of central bank officials speaking at 7:45 p.m. ECB Donald Trump was speaking. 8 p.m. Fed Barking will be speaking. Then followed by a slew of this is considered as not a tier one US data are to take note of. Then follow that, we have a slew of US Federal Reserve officials speaking, starting from at 9 p.m. Bank of England man will be speaking. So this is more likely due to the sidelines of this ongoing IMF World Bank convention or summit that is being held in New York over here. So we have a slew of US Federal Reserve officials speaking, 9 p.m. all the way to 10 p.m. Fed Bar, Fed Millen, Fed Waller, Fed Bowman. So do take a note of interesting for Fed Wheeler and Bowman over here. So Fed Wheeler and Fed Bowman are the first two US officials that sounded much more dovish than the pack even before September FOMC meeting, where US Federal Reserve finally do its first interest rate cut. So do take a note at during these two US official speeches, if they continue to sound much more dovish over here, that could potentially see a further reinforcement of more Fed rate cuts back or into 2026, or a higher odds that could continue to maintain this higher odds of Fed rate cuts back into 2026 over here, where the CME Fed Watch 2 is now looking for a potential 3 interest rate cut for 2026 over here. Then as we head into that, for this PPI and core PPI, this data here will be likely not to be released considered as retail sales, given this ongoing US government shutdown, given that these data are being compiled by the US Statistical Agency, which is considered as a government body. All right, so this data will be unlikely to be released over here for today. Then at 12 a.m. Singapore time, we have the ECB President Lagarde speaking, so likely will also be on the sideline of this IMF World Bank Convention Summit in New York. So that will be at 12 a.m. Friday, 17 October Singapore time. That could potentially influence the euro dollar and the euro crosses. And for those who are looking at the West Texas crude oil, the EIA weekly crude oil stockpile change will continue to have an impact on the intraday movement of the West Texas oil that continues to remain in a bearish momentum as of yesterday's technical analysis I'll share with you guys. So that will be at 12 a.m. Singapore time. All right, over here. Then followed by that, it will be a rather quiet session, except for some US federal officials speaking. Fed banking will be speaking at 12:45 a.m. Singapore again, and 4:50 a.m. Fed Muran. I think this shouldn't have much of an impact since they have already spoken before, especially Fed Muran, which is formerly the White House economic advisor, which is his speech will be definitely be very, very dovish, that is moving in line with what US President Trump wants. All right, over here. Then other than that, that will be that will be it for today. So much more of a key central bank official speaking, not much of a data to watch out for today. And also bear in mind that the fluid news flow will still be on this ongoing US China trade tariffs related news flow that could actually sway the market. So in terms of such situation, there is no way that we could predict who will be speaking, what will be speaking, and how will it be transpired. So be mindful that this could cause a volatility movement, either on the swift volatility movement, either on downside volatility or upside volatility. So given such situation over here, is very much prudent to actually to have proper risk management approach, especially if we have trading on the intraday basis. Okay, so with that, I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.